Take a look at this op-ed. It's from MarketWatch. Here's the headline: Bitcoin is close to becoming worthless. The article was written by Atulya, Sarin, finance professor at Santa Clara University, who joins us now. Sir, make your case, please.
Thanks, Stuart. Stuart, there is actually a fundamental reason for that and a technical reason for it. Fundamentally, Bitcoin has not lived up to its hype. Primarily, if you look at all the activity around Bitcoin, it's mostly around trading. It doesn't seem to have too many use cases.
Okay.
The ultimate promise of it helping it bank the unbanked has certainly, it has not lived up to it. But from a technical perspective, and that's what I'm talking about in this article about the death spiral, to understand that we have to go back last year when the price was around 19,000 or so. At that point in time, the future trading started. And what you could do essentially was you could mine Bitcoin at around 5,000 while you could sell it in the futures market around 19,000. And that clearly attracted a lot of arbitrageurs who got involved with the mining activities and were guaranteed an arbitrage profit. As more and more entered into the market, what happened was that the price of Bitcoin declined and it came around where it should have been, which is sort of the cost of mining plus a modest profit. But now the prices are falling. And then actually all the miners are in a position whereby they'll end up making negative profits.
So it costs more to mine this
consequently,
thing. I'm not quite sure what is meant by this, but it costs more to mine it than to actually buy it and own it? Is that what's going on? That's
exactly right. And you nailed it on the head, essentially. That's exactly the crux of the argument. And that's not sustainable. There is a self-correcting mechanism in the algorithm whereby if the price goes down and miners exit, the cost of mining decreases, so the miners can continue to make profit. And but it's not instantaneous, and there is a lag. And the rate at which the miners exit could be higher than the rate at which there is a decline in the price of a Bitcoin.
But your forecast is Bitcoin is worthless in the fairly near future. Is that it?
The idea really is, I guess mining is not like in traditional gold mining or anything of that sort. The miners are the ones which effectively provide the computational power to keep a record of who owns what. Okay. So if the cost of mining exceeds at the price at which they can buy, they will stop mining. And if they stop mining, consequently, there will be no computing power provided to effectively maintain a ledger of who owns Bitcoin, and no transaction would be possible. And if there is no transaction happening and there is no record of who owns what, then all you have is a set of numbers. And then those numbers are worthless.
Atulya, you make a very good case, and I think I understand it, despite the technicalities of it. But I understand where you're coming from, and we'll be checking that price. Thank you very much, sir. We appreciate you being with us. Thank you, sir.